Welcome back, traders. Happy to have you here today. The cup and handle indicator is a tool that automatically draws out the cup and handles chart patterns on the trading chart. The process of manually drawing out cups and handles chart patterns on the trading chart might sometimes be confusing for inexperienced traders. We often don't trade what we see, but what we want to see. As a result, we draw a chart pattern to forecast the direction we wishfully want the price to move towards. Even though the cup and handle chart pattern belongs to the family of complex chart pattern and technical analysis, its profit objective and winning probability makes it enticing to traders in the financial market. The cup and handle indicator tool developed by FxDailyReport will systematically draw out this pattern, thereby protecting traders from making a technical error in their analysis. To apply this indicator on the trading chart, search the keyword cup and handle on the indicator search box. Make sure to use the ampersand symbol for your AND. Don't use the regular AND word. Select the cup and handle EP version by FxDailyReport. Here's the indicator on our trading chart. How does the cup and handle technical indicator work on the price chart? Pivot points, PH, highest points in a certain period, are stored in an array. When there's a new PH, the previous PH is compared to the latest one. A temporary test line is drawn between these 2 points. The script checks if a close between these 2 points doesn't break above this test line. Test line is deleted afterward. If it doesn't, and the percentage max breaks are not breached, 2 circle-shaped lines are drawn, top and bottom line of the cup, which forms the cup, together with the handle. The red box, handle, is the maximum 33 to 50% retracement percentage of cup height. Only the latest pattern is shown. Enabling Show Cup Labels show the position of cup patterns in history. Under the input settings, the percent max breaks is the maximum highs, lows breaking through the top, bottom line. Percent of bars between left and right extreme points of the cup. The left and right regulate pivot point values. The PP back max look back for pivot high. The percent angle sets the maximum angle between the highest and lowest top points. This is calculated as a percent difference against the highest and lowest 500 bars. The percent cup height, top, bottom, and the percent max of the cup are added to or subtracted from the circle-shaped line. How can we use the cup and handle indicator to detect trade opportunities in the market? This technical indicator is applicable for trading a bullish setup. First, let me show you how to use this tool for the continuation of an uptrend in the market. For the continuation of an uptrend with the cup and handle technical tool, patiently wait for the indicator pattern to pop up on the price chart. Once this is formed, ensure there's a strong bullish close of price above the handle of the pattern. Once there's a strong bullish close, you can proceed to buy the strong bullish candlestick. Stop loss can be placed below the low of the red zone of the rectangular formation of the pattern here. Traders can target the measurement objective value of the rounded bottom of the pattern. For the measurement objective, take the measurement from the low here to the point of the bullish price breakout here, and then extend the measurement value upward to forecast the price movement. Alternatively, traders can trail their profit once they achieve profit above 2 risk-reward ratio level in the trade setup. To apply the cup and handle pattern for the reversal of a downtrend into an uptrend, traders should patiently wait for the indicator pattern to pop up on the price chart. Once this is formed, traders need to ensure a strong bullish close of price above the handle of the pattern. Once there's a strong bullish close, it's essential to figure out a retest of validation of the bullish breakout zone. The retest of validation should be confirmed through a bullish price action candlestick to prove the broken resistance has turned into new support for the price. Traders can then apply their stop loss at the low of the bullish price action candlestick that acted as the validation entry level for the buy setup.